So in this section, we will look at commodities now. So this is chart number 11, crude oil, daily chart. Question number 1, is this a multi-tested support level? So this pink color line. Number 2, is this a multi-tested resistance line? So again, this pink line I have drawn for you. Number 3, once this box range is broken, what should ideally be your target? So you see a box range here. Once it breaks, what should be your target? Number 4, after this box range, why would you expect prices to go down? Number 5, would you go short on this candle and why? So this red candle. Number 6, why would you not be surprised to see the high of this candle becoming resistance? So this long red candle. Number 7, which two patterns is this candle completing and why? So you look at this small green candle. That's the question. So question 1, is this a multi-tested support? Of course it is a multi-tested support. So you have a support established here. It is tested by these 3 candles. So that becomes a multi-tested support. Is this a multi-tested resistance line? Of course. You have resistance here, gets tested here. Number 3, once this box range is broken, what should ideally be your target? So the target is measured like this. So you project that same distance down. So somewhere here, that should be your target. After this box range, why would you expect prices to go down? So that distance, why did we measure it down? Why did we not measure that distance upwards? Well, the reason is very simple. Prices generally move like this. So price goes down, then there is a box range, and then it continues with the same trend. Similarly, when prices go up, they create a box range, and then they continue to go up, right? So in this case, the price has been coming down, so it will go flat, and then it is likely to go down, which in this case has happened. That is why I would expect the prices to go down. Next, would you go short on this candle and why? The answer is no. Clearly why? Because if you go short on this candle, let's say you sell short here, your stop loss is going to be here, your support level is here, so that's a very poor reward to risk ratio, not even 2 to 1. So I would not go short on that candle. Number 6, why would you not be surprised to see the high of this candle becoming resistance? So if you look at this red candle, it opens near the high and closes at the low, right? So that satisfies our criteria for a long black or red candle. So when that happens, the high of that candle becomes potential resistance. That is the reason why. Number 7, which two patterns is this candle completing and why? So the first pattern is these 2 candles, that's a bull harami, and the second is the inverted hammer, the standalone candle, that's the inverted hammer. Why bull harami? Because the market is going down and this body is engulfed by the prior all real body. So that's the bull harami. And why inverted hammer? Well, the market is coming down and you have this inverted hammer candle here, which usually comes after a downtrend, and it's a bullish candle. Next, this is chart number 12, gold weekly time frame. Question number 1, give me 2 reasons why you would not buy on this hammer. Question number 2, does this candle complete a dark cloud cover? Does this candle confirm prior resistance? So this red candle. Number 3, why does this candle not complete an ideal piercing pattern? So you have to look at these 2 candles. Number 4, why do you think the high of this candle is acting as a strong resistance to this tall red candle. Number 5, could this candle be classified as a shaven head, shaven bottom candle? So we are looking at this candle. Number 6, how many doji candles are there on this chart? And number 7, apart from completing a bearish engulfing pattern, what else about this candle points towards more bearishness ahead in this market? So we are looking at this, the red candle. So question 1, give me 2 reasons why you would not buy on this hammer. So first reason is, of course, if you buy on this hammer, your stop loss would be here. Your target would be here. So that's a poor reward to risk ratio. We need at least 2:1. So that is one reason why I would not buy on the hammer. The second more subtle reason is, if you draw this line, this support line, you will find that the hammer is not confirming that support lines. For a confirmation, you need the shadow to cross and then close back up above to create that hammer. But that's not happening here. So this support is not confirmed. Okay. So those are the 2 reasons why I would not buy on the hammer. Number 2, does this candle complete a dark cloud cover? Does this candle confirm prior resistance? So the prior resistance is here and here. So it is not confirming prior resistance. And of course, it does not complete the dark cloud cover because the close is not below the midpoint of the prior white candle. You cannot take the high of this candle to be as a resistance, because you need a pattern to complete for it to become a resistance. It's potential resistance, but it's not resistance. Okay? Resistance is created from the pattern and subsequent price action. Yes, the high of this candle can become resistance in the future, but we don't know that for now. And if this would have been a dark cloud cover, then we treat the high as the resistance. So that's a subtle way of looking at resistance. Number 3, why does this candle not complete an ideal piercing pattern? See, for an ideal piercing pattern, the opening of the green candle should be below the low of the prior black candle or the red candle. That is the reason why it's not an ideal piercing pattern. Number 4, why do you think the high of this candle is acting as strong resistance? Well, because it satisfies our criteria for a long black or red real body. It opens near the high and closes near the low. Could this candle be classified as a shaven head, shaven bottom candle? The answer is no, because although there is no upper shadow, you can still see some lower shadow here. For a shaven head, shaven bottom, there are no shadows for that candle. Number 6, how many doji candles are there on this chart? So let's see if we can find a doji. So this is one. This one. What else do we have? This cannot be called a doji. It's a green candle. And this is also a green candle. This one is a doji. So that's number 2. So there are 2 doji candles on this chart. And if you look at this line is a bit thicker than this line. So this is a perfect doji. This you can't really make out whether it's a green or a black candle, but it's thicker, right? But in the context of this chart, I think both the candles should be treated as doji candles. Apart from completing a bearish engulfing pattern, what else about this candle points towards more bearishness ahead in the market? Yes, it's a bearish engulfing pattern. Apart from that, if you look at the upper shadow, there is a tall upper shadow. Remember, the higher the longer the upper shadow, the more bearish is the candle. So that upper shadow points towards more bearishness in this market. Next, this is chart number 13, silver, daily time frame. Question 1. Spot the morning star and the evening star on this chart. Question 2. How many green or white candles are there on this chart satisfy our criteria of a long white or green real body. Number 3, how many inverted hammers are there on this chart? Number 4, can you spot the false breakout on this chart? Number 5, what does this candle confirm? So this red candle. Number 6, is that a hammer or a hanging man? So this small red candle. Number 7, what do these two spinning tops indicate? So you have to look at this candle and this candle. What do these two spinning tops indicate? So question 1, spot the morning star and the evening star on this candle. So if you look at these 3, that's a morning star, a variation of a morning star. And if you look at these 3, that's an evening star, a variation of a evening star. Number 2, how many green-white candles on this chart satisfy our criteria of a long white or green real body? So if you look at this, this doesn't satisfy, this satisfies, opens near the low, closes near the high, so this is okay. What about this candle? No, it has upper shadow. What about this? Well, it opens near the low, closes near the high. However, the size of the candle is not large enough compared to this. So I reject that candle. Then what else? This candle? No, because of that upper shadow. What else? This one. Hardly any lower shadow. Closes near the high. So, and a very tall candle. So this satisfies. And no other candle. So there are 2 candles which satisfy our criteria. How many inverted hammers are there on this chart? So inverted hammer, remember, it comes after a downtrend. So let's look at a downtrend and see whether we can find an inverted hammer. There is no inverted hammer here. Let's go further down. See this candle? The market is coming down. And you see this candle, although I would have wanted the real body to be a bit smaller, but in this case, the height of the upper shadow is more than twice the height of the real body. So this qualifies this candle. And of course, this one too qualifies. It's very easy to see that that's an inverted hammer. What else? This candle is not an inverted hammer because of that lower shadow. So that's it. You have 2 inverted hammers on this chart. Number 4, can you spot the false breakout on this chart? See, by now this should be easy, right? You take this candle, this is the high where the market began to turn. So if I draw a line here like this, that's a multi-tested line, correct? For a breakout, you need a multi-tested line. So it breaks out and then closes back below. That's a false breakout, which is called as a falling off the roof. What does this candle confirm? Well, you see these 2 candles. That's a last engulfing top. And this red candle, the close of the red candle confirms the bearish implication of the last engulfing top. Number 6, is that a hammer or a hanging man? Well, it's not a hanging man, that's for sure, because a hanging man comes after a uptrend. There is no uptrend here. I wouldn't call it a hammer because, see, hammer should come after a downtrend, although there is a downtrend here. But the uptrend has already started with this morning star, right? So I would not call it a hammer as well. So it's neither a hammer nor is it a hanging man. See, if this hammer would have been, if you replace this candle with this candle, okay, then it's a hammer. But since it is coming after that morning star, it's not a hammer because the prices have already started to move upwards. What do these 2 spinning tops indicate? Well, these 2 spinning tops indicate indecision in the market. They indicate that the prior trend is likely to end. They don't tell you whether the market will go down from here. All they are telling you is the prior trend is likely to end. Next, this is chart number 14, copper, weekly. Question 1, would you go short on the dark cloud cover? Why? So you have a dark cloud cover here. Question 2. Would you consider going short in this area? Why? So you have this area here. Question number 3. Generally, windows on the weekly charts are rare. Spot the following window on this chart. Number 4. This candle confirms the bullish implication of the inverted hammer. Why would you not go long on that candle? So we are looking at this particular all green candle. Number 5. Why does this candle not complete a 3 black crow pattern? So this one. Number 6. Spot a star on this chart. Number 7. Where is the doji on this chart? Is that doji relevant? Should we give importance to it? So question 1, would you go short on that dark cloud cover and why? The answer is no, I would not go short because it's not confirming this resistance. So for confirmation, what you need is, you need the dark cloud cover to cross and then close back down. So, which is not happening here, which means there is a possibility that the price might go up as to that resistance and then fall down. So that is the reason why I would not go short on that dark cloud cover. It has to properly confirm, right? Number 2, would you consider going short in this area and why? Of course, I would consider going short in this area. I'm not referring to any specific candle because you can clearly see the change of polarity here. If I draw this line, that's a multi-tested support. If I continue drawing this line, as you can see, your old support has become new resistance. So I would definitely consider going short in this area because of the change of polarity. Generally, windows are on weekly charts are rare. Spot the following window on this chart. So on this chart, if you see these two candles, there is a falling window. There's a little bit of falling window here. Number 4, this candle confirms the bullish implication of the inverted hammer, this one. Why would you not go long on that candle? Well, the answer is simple, right? It's not confirming any prior support area. The support is this. The support is this. This is much above support, which means the price has a potential to come down and test these support levels, which in this case, that's exactly what happened, right? That is the reason why I told here also, let it confirm properly. See, if you draw this line, you will find that none of these two candles is touching that resistance line. That is not a proper test. So you have to wait for a proper test. That's why I would not go long on that green candle. Number 5, why does this candle not complete a 3 black crow? Well, for a 3 black crow pattern, ideally, you need the 3 candles to open near their high and close near their low. You don't want much in terms of length of shadows. The smaller the shadows, the better it is for a 3 black crow pattern. In this case, there is upper shadow, there is a lower shadow. Number 6, spot a star on the chart. So a star is something, it's a small candle which gaps away from a all green or red candle. So in this case, if you see, is a tall red candle, and if you see this candle, this tiny little candle, small real body gapping away. So that these two bodies are not touching. The shadows are touching, but the bodies are not touching. Okay? That's why it qualifies as a star. It's an indecision candle basically. You never initiate a position on a star, but you can use it to exit or scale back your existing positions. Number 7, where is the doji on this chart? Is that doji relevant? Should we give importance to it? So I think this inverted hammer, that can be considered as a doji because almost the same opening and closing. I don't see any other dojis on this chart. This cannot be called as a doji. It has some color. Where else? I don't see any doji on this chart except for that inverted hammer. And is that doji relevant? Of course it is relevant because it's coming after a downtrend. It is signaling that their downtrend is likely to And should we give importance to it? Of course we should give importance to it, because not only is it a doji, but it's also completing a inverted hammer. Next, chart number 15, natural gas, daily time frame. Question 1. If this candle were a perfect doji, then which pattern would it complete and why? So we are looking at this small candle here. Number 2. This spinning top is completing a pattern and it is confirming something. Name the pattern and tell me what is it confirming and what does it imply. So this small candle, that green candle. Number 3. This candle is completing 2 patterns. Name them. So this tall red candle. Number 4. A doji after a tall white or green candle becomes what? As long as it is near a market high. So you have to fill in the blanks. Number 5. If this candle had opening near its high and closed near its low, then would you have gone short on the candle? So you're looking at this candle. If it had opened near the high and closed near the low, would you have gone short? Number 6. What does this tiny little candle complete? So this candle. Number 7. The lower shadow of this candle is more than twice the height of its real body. Is it a hammer? Why? You are looking at this candle. Question 1. If this candle were a perfect doji, then which pattern would it complete? So if this candle were a doji, it would complete a bull harami cross. Why? Because in a harami pattern, if the second candle is a doji, it is called as a cross pattern. The spinning top is completing a pattern and it is confirming something. Name the pattern and tell me what it is confirming. So, the spinning top completes a bull harami. That's number 1. It is confirming something. What is it confirming? If you look at these 2 candles, if those 2 candles had come after an uptrend, we would call it bearish engulfing pattern. But since it is coming after a downtrend, we call it a last engulfing bottom. And this tiny little candle is confirming the bullish implication of the last engulfing bottom, right? So that candle is very bullish. So even though it's a spinning top, it's a very bullish candle because it is confirming something. See, people who do not have knowledge of candlesticks would ignore that candle, saying that, okay, it's a tiny little candle, it's indecision, it doesn't mean anything, let us wait and see what the market does next. But since now you know these patterns and you understand what the implication of the close of the candle above the close of the black candle, you are in a better position to take advantage of this candlestick's knowledge, right? So imagine if you would have gone long on that trade, because this is also confirming the support. So if you would have gone long on that candle, look what happened. Price went up like crazy, right? So that's the advantage. That's the benefit of using candlesticks. That is the benefit of going deep into candlesticks knowledge. You can see things which other traders cannot see. Most professional traders would look at that candle and just ignore it, saying that it's a tiny little thing. But not us. We can look at that candle and get the early clue that the market is likely to go up from here. And look what a fantastic trade this was. The price went from around 5.5 to around 9. That's a double, right? Number 3, this candle is completing 2 patterns. Name them. So first it is completing a bearish engulfing pattern. Second, it's completing a evening star. Number 4, a doji after a tall white green candle becomes resistance. So this line becomes resistance because the doji comes after a tall white candle. as long as it is near a market high. And as you can see, it has become the resistance. And you see the false breakout also there. Number 5, if this candle had opening near its high and closed near its low, then would you have gone short on the candle? The answer is no. Just because the candle satisfies the criteria for a long black or red real body, it doesn't mean that you go short. It simply means that if this condition was satisfied, then we would treat this high as resistance. Okay? That's all it means. Number 6, what does this tiny little candle complete? This tiny little candle, it completes a falling window. Okay, again, I want to emphasize that those people who do not understand candlesticks properly would ignore such a little candle. But for us, it is very, very important because it's completing a window. And number 7, the lower shadow of this candle is more than twice the height of the real body. Is it a hammer? The answer is no. Because for a hammer, not only do you look at the lower shadow, you also have to keep an eye on the upper shadow. The upper shadow is larger than we need. Preferably, there should be no upper shadow in the case of a hammer.